That's dope. That's dope.
That's dope. What's up, Wolfpack? Scott Melker, also known as the Wolf of Wall Street. And before we get started, go ahead and subscribe to the channel and elbow the like button. Simply just elbow that like button. Been 3 hours since you saw me last. Did you miss me? Feels like you missed me. I feel missed. I feel missed by you guys. Feels like you missed me. Hope you're having a great afternoon. I think the whole world now is doing this. Holding their breath, waiting for J Powell, MC Powell, Jerome Powell to drop the hottest mixtape of the year. The mixtape that will largely determine what happens in markets for at least the next 17 to 19 minutes. What happened with the Fed hadn't happened yet. It's going to happen in 30 minutes, and then he's going to talk at 2:30. It's going to happen. That is what is going to happen. Do not break your elbow on the button. Don't break your elbow on the button. So yeah, I mean, it's about to probably be roller coaster time. Wee. That's what we're probably about to do with the markets. But first, let's get to what's important. DYDX, my amazing sponsor, largest decentralized exchange in crypto, guys. Users can now trade with zero gas cost, cross-margining, up to 25x leverage, and the ability to earn DYDX. Also, now, as you know, they've gotten rid of the gas fees for depositing funds. And even more sweet, they started an amazing trading league. Trading Leagues went live yesterday. It says going live tomorrow here, but it dropped yesterday, just like J Powell's mixtape. It's first of its kind product where traders compete on a weekly basis to get promoted, demoted, level up, and win cash prizes. If you're trading on DYDX, you might as well do this and try to go get some of that sweet free money. DYDX is awesome. Unfortunately, not available to Americans, but the biggest decentralized exchange and behaves like a centralized exchange. You go on there, there's order books. You get all the benefits of a DEX and all the benefits of a SEX, but that's CEX. You don't get all the SEX benefits. This is not a friend with benefits. Not a friend with benefits. So guys, what are we doing here today? What are we doing? Chartapalooza. We're going to take a look at chart requests for paid subscribers of the Wolf Den newsletter. How are you guys not subscribed? Tomorrow's is going to be free, I think. I think tomorrow's free day. So if you haven't checked out the newsletter, tomorrow's your chance. Tomorrow is very much your chance. Is the link for the newsletter in the description? It should be. If it's not, then I don't know. I don't know what we're going to do. Yeah, it's there. You can see it right down below. Sign up. It's free. There's also a $15 version. Super cheap. But yeah, I take some requests from the paid members. And then on Wednesdays, I look at my assistant takes his favorite 25. Don't blame me. Don't want to hear it. And stop spamming the chat with your requests. I'm not looking at them. And then I look at them. That's for the $15 a month. You get me to be your charting slave. Charting slave, the leader of the pack. Still don't know what your picture is there, Steven. It's so small. It looks like you're holding up red pants, a wig, and a yellow helmet. But none of those are on a person. Yeah. Yes, I'm saying that my advice is cheap. Newsletter's worth it. My advice is cheap. Mostly free, to be quite honest. Mostly free. Yeah. Anyways, guys, should we do it? Should we get going? Because, we're all going to want to be seeing what's up with the phys ed pretty soon. So, yeah, let's come in here. First had that's SPX. Stonks kind of uply, but trading sideways. I think there's just a lot of anticipation right now, waiting to see what's going to happen. Bitcoin, no reason to look at the chart right now. Same as it ever was this morning, right? Things looking good. 37,737. When we were supposed to be going to 28 by Monday, I think there's a little optimism right now. And also, just going to mention this again. Super negative funding. Staying negative. People are super negative right now. piling in shorts as price goes up, trying to short the next move down on the bounce. We were long the whole way down. Now I'm getting paid to still be long. I have moved my stops way up just in case of Fed complete nonsense. Same as it ever was. Same as it ever was. Same as it ever was. It's Talking Heads, guys. You guys know that song. Letting the days go by. Come on. Anyways. All right. Let's dig into your chart requestings. Chart requestings right now. Adam BTC. Have you ever met my friend Adam? Adam BTC. He's from the Connecticut BTCs. Might know them. Nice family, those Connecticut BTCs. This is Adam BTC right here. Right here. Right here. Right here. Yeah, chopping. Chop suey. Got a little range here. God. So I'm an investor in Valkyrie, like the Valkyrie ETF, in the actual company, not in the. I do own the ETF, which has been a bigly loss, but I support, and I have Bitcoin in their fund. But yeah, and they're doing their shareholder meeting right now, and I had brought in like all my friends as investors. I gave them all pieces of my amazing investment, which I should have kept for myself, but I was real nice. And all my friends were like, I don't want to buy Bitcoin. I want to invest in something real. So I brought them all in on that. It's up like hundreds of times. But they're having the investor call right now. And so my phone is absolutely blowing up with this group chat. It keeps going off on my watch. Cool story, bro. Anyways, yeah, you're in this little range on Adam. You got to get above 0.0010335 now. That's this line up here. Is that the all-time high? Not the all-time high, but the high for the last few years. Right? Or look for a retest. What is that line? Yeah, that's a big line. Or look for a retest of this area down here, right? Maybe down here. Can't see buying this right now. It's chopping sideways. Guys, Bitcoin dominance sort of, yeah, I do need to update my browser. I just saw that. You guys can see that? Fuck, man. Embarrassing. Should have done that. Maybe that's why this thing is tripping. But yeah, so Bitcoin dominance is pumping, guys, and it looked like it was bottoming out. So I'm not that optimistic on Bitcoin pairs at all. You guys know that. I've only said it like 1,000 times. If you're trading USD pairs and you just like to make a little less than you would if you were maybe sitting in Bitcoin or protect less, fine. Bitcoin pair is not looking great even on the strongest. But yeah, this is ranging sideways, well below resistance that needs to be broken. It needs to, maybe you get a retest down here if you're looking for a drop, but I don't see any reason to be looking at that on that pair right there. Ooh, guys, I missed one. Algo, USDT. Little bull div. See that right there on the daily. Probably see it on the 12-hour. Yeah, I see that's lower lows on the candle closes, higher lows. That's pretty sweet, but also has hidden bearish divergence. Yeah, right there. Higher highs on our side, lower highs right here. Let's go back to the daily. Try to go back and find where support is here. Yeah, I mean, it's right at a key level. Like right at a key level right now. I can see from the dotted line, look, it's coming through all these highs right here. That's red. That's red. My God, I'm gonna have to take my watch off. People blowing me up right now. Blowing me up. Oh, guys, Future Unchanged here. He just left the Fed meeting. He's got all the insight. That's a lie. He doesn't. Yeah, this is, I mean, just look at these levels, right? That's it. That's algo. Play it level to level. I don't even know. Yeah, I'll keep that one. We'll call it that. Just to have a bias, right? So this is now resistance at 0.9408. Technically, you got a breakdown. You could call that a resistance. So if we do drop, if Bitcoin drops, I'd be looking to get into algo around 67 cents right down here. Below that, it's Goblin Town. So yeah, I would say that just look at these key levels and trade them. Trade them as they come. Not much more to see. Not much more to see there. Axie Infinity. My friends who bought Axie at like $164 because they wanted to like farm Ron or some shit. I don't know. I don't really know what that means. I was like, yeah, I'm not buying Axie Infinity with you guys at $164. I mean, it's cool. They're like, normal guys who are like, man, Philippines, it's taking over. And I showed it to them and it is awesome. And I was like, I don't know, but there's like the first mover in this metaverse play to earn thing. It's going to probably drop. Yeah. But I told them yesterday, they were very excited. I was like, I might consider buying some Axie at $48. Yeah. Might consider that. It would be irresponsible for me not to cover the Fed meeting. The problem is I have a call at 3, but I could turn it on if I'm still here at 2:30 and attempt to stream it, and we could watch it. We could do that. But yeah, actually, taking the D right now. But yeah, I would say that we have a pretty clear level here-ish, maybe. Yeah, not that clear because it hasn't been tested. And then we're down, like I said, you're a troll under the bridge. If you're looking at $11, it's over for you. Yeah, I could see taking a shot here at 48 if you're trying to build a position. Like that was like me buying Sol at 116, being like, yeah, probably going to go down some more, but I want to get some. Like if you're trying to get Axie Infinity, you could do worse than, a like 70, whatever this is, % off sale. Big time. Right. So I not that much, but yeah, you get the idea. Right here, 48.10. If that holds, this looks pretty decent. So if you lose kind of this area, maybe then you start bidding $37. And then really $30. That was never retested. Right? This was never ever retested at support on the way up. The rest of these levels were. Maybe it gets there. Maybe I'll hold off a little bit, see if I can get this shit for $30. But you know what? When you say I'm going to buy lower, that means I'm never going to buy. Let's be real. We'll see. Might start to look at Axie Infinity, but there's no real sign of reversal, guys. I mean, let's be real. All these drops look like bearish consolidation of some sort, right? Drop, consolidate. We need to see a real push up. Honestly, like flipping back through this area right here, maybe like 65 or something. That's when you could start being a little confident. Chili's baby back ribs. Chili's baby back ribs. Barbecue sauce. Chili's. Chili's doing sports and stuff. That's their motto. Doing sports and stuff. Golf and stuff. I mean, this depends on where you draw your lows. Could be this wick, this wick, this wick. Let's be nice. Kind of the same, right? All these coins. I think it was yesterday's issue, Monday or yesterday's issue of the Wolf Den. I posted like 10 charts of coins that were like sitting just above support that look like this. This is a thing right now. Either we're going to hell or you're buying strong support. I can't tell you which one it is. I can just tell you that the risk reward is good if you put a stop like right below here. And if you lose it, bye-bye. Position accordingly. No volume. I mean, none on any of this shit. But yeah, you're at support. That's all I can really say. At support. If that loses, I mean, damn. 11 cents right off this. 5 cents. Is that where we're going? Good. I don't know. But here, if you zoom in on this, though, look. We're showing these could hold support. Really, a lot of these. Look, that's a potential inverse head and shoulders, obviously, right? Or it's this. The good news is that you usually, if it's bearish consolidation on all of these, look at that. That should break up. Perfect. Down, up, down, up. That's a confirmed descending channel. If it was a bear flag, it would be like this, right? And if it was a bear pennant, it would be like this. That's not what we're seeing here. Right? Descending channel. Descending channel is a good thing. I don't use a weed whacker to cut your hair. I have your mom do it, and she's naked when she does it. Totally naked. Haven't cut my hair in weeks. Your mom's great at haircuts. Naked. Mostly naked. So yeah, this should break up. So when you see things like this, it makes you more encouraged that support might hold. I like Bentoshi, who says we're around the bottom. My friend, and I listen. I'm long with leverage. You know that I think the bottom could be in. Not many of us saying that. Whatever, whatever, man. Yeah, Dan. Yeah, shouldn't have asked about my hair, Tom, because like those dudes, Wade's crew, you got served by Omarion and his variant. Thank you, Blake. I'm glad you think that I'm kind of annoying. You know what I generally do when someone's kind of annoying? I listen to them for hours at a time. I just hang out on their streams because I dislike them so much. Yeah. You're like the dude who like pulls the girl's hair you like. I really like her, but I'm going to be a dick. You love me. You love me. You love me. You love me. Give me a kiss. Bring it in. Yeah. Okay. Somebody said I used to set alarms for charts I like. So because I wouldn't want to, there you go. Chili's exiting channel. We now have an alarm for you. That's how I'm looking at it. CROcrypto.com. Yeah. God, man, you're so annoying. So what chart are we looking at next? Crypto.com.org. Cryptocom. Yeah, I don't see any no reason to change what I was looking at up on here. Up in here. Y'all go make me go all out. Up in here. We still have the 200 MA below price on the daily here on crypto.com, which is kind of a rare thing at this point, right? Most are getting served. Yeah, I think anything above 31 cents looking kind of decent. At this point, I would say, let's get rid of that line. That's a dumb line. Let's move that line to here. I would say you want to get above 42 cents and above this blue line, right? And those things can happen at the same time. You could do like one of these thingies, you know? Get that retest. Bam. Oh, no. That's not what I was trying to do. Don't call me Mr. That's my dad. My dad's Mr. Scott. No, he's not. He doesn't have my same name. Bro, you need some solid rest. Bro, you need to mind your damn business. If you're talking about the bags under my eyes, everybody knows those are genetic. Everybody knows that. I can't even keep up with your silly comments over here. Or my watch. I'm literally taking my watch off. It's so annoying. Stop asking me questions. When you bring friends in to invest in stuff, they never leave you alone. One of my friends, it's like you like literally made like a pretty small investment and it's worth 7 figures and has bitched the whole way. There's a problem. They're not delivering. Shut up. Shut up. Give me the money back. Crypto.com. Yeah, I think you got to break those lines. That's what I'd be looking at. Nice move here. I want to get above those levels. Hello, friend. Hello, friend. What do we got? Not going to tell you what coin's good to buy now. A la Alu. You got to make your own decisions, bro. Sorry. Why is it dangerous to weightlift while listening to the wolf? I've been known to behave like steroids. Listening to me makes you stronger. Everybody knows that. CRV. That's a big breakdown, bruh. That channel got smoked. Again, though, right? And this is just like, here, I mean, come on. That doesn't matter now. We knew that broke down. Yeah. I would say, yet again, we have a coin wicking below support and kind of holding it. Like they're all the same, right? If you can hold 269 here, looking pretty good. I would say this is what you want. I draw these and then people are like, you were wrong. No, it's what you want. You want that entry. You want to flip this 323 and catch it on the rebound. Catch it on the rebound. Yeah. So, yeah. I mean, yeah. 1 second. I don't like this line. Revise. Gonna do some line revisions. Actually, it's not bad. It's not bad, actually. Right there. And this is like a chop suey disgusting fest. So I wouldn't see any like very clear support in that. Maybe right here, So yeah, you do not want to lose 260. Then you're literally looking at, I don't know, $2 or 163, something like that. So there's your levels: 639, 427, 323, 269, 206, 163. Better if you say them like an auctioneer. Blake would like me to eat my boogers. Oh, you were telling me annoying and you're also 12. Sorry, man. I didn't mean to make fun of you. I didn't know you were a child. Did not know that you were a child person. Yep. 57 missed text messages. Leave me alone. CRV. DFIUSDT. DeFi chain. Cool. Yeah, I mean, whatever. Let's get rid of that. I don't know how to trade that, dude. Nothing wrong with it. Wasn't even trading for all these days. I mean, kind of head and shoulders. The kind of looks like Mount Everest. This is the rare mountain climber pattern. I don't know. I got nothing on this chart. Literally, I look at this chart. I'm like, I don't know. Anybody see anything? Okay, I see something. Oh, yeah. See that. All right. Okay, playa. Play on, playa. Play on, playa. It's going down, fade to Black Street. Play on, playa. It's no diggity. You don't know about that shit. You youngins don't know about that good music. No diggity, no doubt. Yet another potential kind of bearish consolidation vibe. I would say if you hold this blue line, have fun going up. If you lose it, probably coming down to here. I don't know, $1.67. Something like this. Something like that. Joshua from McDonald's would like you to know that we have another bull trap. Dr. Dre was not only on that track, Dr. Dre produced that track. Yeah. Teddy Riley, Black Street, Dr. Dre. Anybody can, okay, better question. Can anybody tell me what the sample is for Black Street? No diggity. Give you a hint of other songs by this artist. Ain't no sunshine when she's gone. Or when I wake up in the morning, love, and the sunlight hurts my eyes. Anyone? Sample of No Diggity? It's not Ain't No Sunshine, but it's the same artist. Same artist. It's Bill Withers. Yeah. Yeah. You'll figure it out. You all have the internet present, so it's fine. Yeah. So yeah, that's DFI. I would like to be above 270, honestly. Back above this. You also have this screaming down 50 MA. I would say as long as you hold this, you're okay. If you lose this, I don't know, start bidding lower, and I'd like to be above 270. When I wake up in the morning, love, and the sunlight hurts my eye. Something without holding weighs heavy on my mind. Then I look at you, and the world's all right with me. Just one look at you, and I know it's gonna be, Carlton, a lovely day, lovely day, lovely day, lovely day, lovely day. Dare you, I dare you to make that song the first thing you listen to in the morning and to have a bad day. I dare you to have a bad day putting that song on the first thing. Used to be my alarm. When I wake up in, yeah, shit's tight. It's cliche, but man, you'll be in a good mood. You'll be in the shower like doing the Carlton, Shit's tight. Dot. This is one. Listen, this is a major area of support. Like if you pull it back, look, if you see why. See why? Support. That's all the support. That's the resistance. That's the support. That's why. Right? Same thing. Is it bearish consolidation? I don't know, bro. Don't know. I don't see a clear, these are lower lows, so I definitely don't see anything gratuitously bad about it. Might want to wait till you break that blue line, but if you're taking a shot and you think the market's bottomed, that looks real good here. That's all I can say. I missed the name of the song, Lovely Day by Bill Withers. It's the second song you listen to every day. Is the first one Nickelback? I bet it is. Nickelback. Where it should be like, this is how you remind me of what I really am. It's not like you, sorry. That's what you listen to. E-Gold looks the same. They all look the same. All look the same. There's somebody out there right now who like literally still wakes up to like bare naked ladies. You know who's a friend of mine from growing up in my town? Sister Hazel, those guys. Ken and Andrew. They've kind of got that vibe too, to be honest. I love those guys. E-Gold, right here, man. $1.21. Major bigly support. You break above this resistance, looking good. All these charts looking very similar. God, man, I'm buying more E-Gold. That's it. I love this project. It was $544. I'm pretty confident it's going to get back up there. I have a lot though. I'm going to buy more as an investment. Are you watching the Fed meeting? No, I'm watching your charts. Chickadee China, the Chinese chicken. Nobody likes this song, but it keeps on kicking. Yeah, it's literally a terrible song. Like bare naked fucking ladies. I mean, God. Yeah. Yeah. We'll see if I'm just gonna keep like clicking back to the markets here and see what happens. Nothing's happened yet. Yeah, guys, these charts all look the same, but we're gonna keep going. Engine number 9 on the New York Transit line. If my train falls off the track, pick it up, pick it up, pick it up. Back on the scene, crispy and clean. You could try, but know why, but you can't intervene. We be the outcast. Black Sheep. Wolf in Sheep's Clothing. Great hip hop album. Yeah, same shit, guys. Look, Engine. Hanging out, wicked below support and holding above every single one. Xanax may help you, Tony. I don't need Xanax, bro. I need some more energy. Your name, Rick Crispy, is throwing me off, man. You're supposed to be Irvin or whatever. Stuff's moving to the upside at the moment, but slightly. 2 o'clock, big moment. Cares, man. Tomorrow will be like, what Fed meeting, bitch? Engine, dude, same shit. Frankly, Frank. I don't know who Frank is. Frank Lee is Bruce Lee's cousin, but frankly, these charts look the same. If you think we're going up, everything is at support and holding it with multiple bullish SFPs. We have liquidity under support at every single one of these that we've looked at so far. Right? Y'all are just over here screaming about some coins I'm not going to look at. Every time, now I get a copyright claim every time I do that. It's annoying. Yeah. Can we get the S&P and the EMA again, please? It's not an EMA. It's a 200 MA, and we are tickling it. Just the tip right now, trying to repenetrate. I don't mean that in a sexual way at all. ETH BTC. Look, remember this? Nope. Fully failed. Up, down, flagpole. Should have gone way up here. Didn't happen. Fully failed. Sorry, Scott. You suck at trading and charting. And you have no business being on the internet telling people how to trade because you were wrong on that one. That's what people say to me, though. That's shit people say to me every day. Now you kind of have this ascending sort of wedge. No big deal. Ethereum bouncing nicely against Bitcoin. That's a good sign. Maybe. Ooh, look, something happened on Chili's. Literally. See it? Chili's. Let's see what happened. Chili's pushing the range highs, guys. Chili's trying to do shit. Chili's trying to do shit. Okay, Chili's is trying to do shit. I'm gonna keep that up. Look at it. Look at it. Look at it. Chili's trying to pump. Got you. Our alts are kind of, we're pumping. Hey, it's good to be long. Remember the guy who was like, you guys are being huge assholes. That means I'm going to go long. That was me. Everybody was being such a dick to me on Monday that I decided to go long because they're such dicks. Everything's pumping. You know what? Fuck it. Copyright claim. Yeah, fuck it. Fuck it. Fuck it. Fuck my YouTube channel. Didn't need it anyways. Yeah, guys. I mean, ETH's gonna probably move harder and faster than Bitcoin. I still think that, but I like to look at the weekly chart. We can look at the daily. I haven't looked at the daily in a long time. That's not even relevant. I don't know, man. Chopping around. Nice little doji. Maybe a bullish engulfing candle coming in on the daily. Looks reversey. This looks very reversey. 3 down wicks, a doji, kind of a morning star vibe, and a big candle. Alts may not die. FTM, guys, we been did this. FTM looks strong as shit, bounced right off that. This was a newsletter entry that we've been waiting for weeks. Finally happened. There it is. Anything above $1.94 is good. Target is 267. Now you want to flip 267 and head to 348. Is everything pumping? I can't even. It's not really pumping, guys. We're up like $300. Stop FOMOing. Chili's is getting rejected. Stop FOMOing. You guys are trying to get me FOMOing. Yeah, but what about my teeth? Thank you. I appreciate that. You just have to pay a percentage of ad revenue from this stream. Yeah, I don't give a shit about ad revenue. Fuck it. I want to dance, bitch. I was probably paid like a couple $100 to dance to that song with you guys. Give a shit. Luna, hanging out. Wow. Here's your liggity Luna line. I hear people walking by my hallway. I hear you lurking. Emmy just came in, walked past my door, tried to be like sneaky and walked up and like I heard like the footsteps and then someone standing outside my door. I heard that shit. I heard that. Someone's asking if it's a Head and Shoulders. It's such a like Quasimodo Head and Shoulders, but you can add that, right? You have head. You did not have a spike in volume really in the head there. You did have it on the breakdown though. You could consider that a Head and Shoulders. But you got something. I mean, you got to have some sort of like real fucked up physical disorder for that to be what your Head and Shoulders look like. Bitcoin's pumping, ADA is pumping. Everybody's saying everything's pumping. I see it went up like a couple $100, but guys, I dig it. I dig it. I told you my target at least 39,600. This is just pushing, right? This is how you wreck bears. This is Bitcoin. Like, look at that. It's that slow grind. They, just like they take an entry and then you just keep grinding up. No big moves, just like pain train running through your station. Could be a bull trap. Sure. Why not? Yeah, SPX broke the 200 MA. I see y'all talk about it. Doesn't mean it'll stay there though. Doesn't mean it'll stay there. We'll see. Yeah, Luna, man. Anything above $62 right here. That's a nice look. 1, 2, 3, 4, 5 wicks. Below that support. Pretty strong. Pretty strong. I think, guys, listen, at this point, I'm telling you, you either, it depends on if you're investing, you just buy these supports and then buy the next dip, chop it up. But if you're trading, these are the best, and they could all go wrong. You could lose money on every one, but the entries you want are places at support with a tight stop loss. These are good risk reward entries because if this is the bottom, you're going to make big money. If it's not, you can justify taking a tiny loss. That's what you want, you know? Matic. Oh, damn, son. We're making money right now. I got alerts going off. We got shit happening down here. This is solid. This is tight. I'm glad we're together for this. See what's happening down here. Internet struggling. Anyways, yeah, we're doing some work. Matic, if it gets above, this has been the line like this whole time. Kind of like whatever at this point. Had a lot of chop around it. But yeah, I think that once again, maybe we can move this now. Right? This was the all-time high, but let's make that. If I had to draw this again now, I would put a line here. 191. Anywhere from here, though. Wow, it's nice to see alts moving too. Really nice. 38,840. My God, I don't know if the Fed is going to print money, but my Ethereum and Bitcoin longs from the dead ass body are my own bottom are my own money printer right now. Guys, I talk about this all the time, but like you don't have to take a lot of trades. You just have to take the right ones with conviction. Oversold, bullish divergence on multiple time frames while literally everyone is telling me I'm a functionally retarded person for even thinking about going long. I was posting, should I go long here? And people were like, it's 100% going down, you idiot. Feed me. Feed me. And guys, people can say whatever they want. I did it all right here live for your attention. Yeah, those are your levels on Matic. $144, $179, $292. Great. Did it all. Yeah. Is this an official announcement or your guess? The Fed will leave interest rates unchanged for now. Let's see. Fed announcement. Saying shit? Do we have an announcement? We have anything? I'm getting no news right now. I mean, I got the Atlanta Fed thing pulled up, but that's not going yet. Right. What's Tesla doing? Holy smokes, it popping hard? I mean, I bought a lot of stuff. I told you Monday was my biggest buying day ever. Yeah, Tesla's pumping a little bit. Chili's still trying to pump. Near. Yeah, I would say near. You got to get above 1323. Oh, see, we drew that and it went up, and that one didn't really happen because the market crashed. But now let's say that you got to do the same shit. Let's make that move again. Got to get above this. We're at 1265. Got to get above 13.2. Otherwise, I would say your next support is here. So you're kind of ranging between these two. That's what's happening with near. They said rates will stay the same. God, if only there was somebody who interest rate unchanged. Yeah, I told y'all, man. Feels good. Riot Blockchain posted this chart the other day, said you should buy this shit at $13. It was $79.50. There's a stock. Got down to $13. Most wrecked shit ever. If you think Bitcoin is going to go up and you want to leverage long without leverage, buy miners. These companies are investing like $1 billion in buying miners, and you think they're going to go down forever. Jesus Christ. Yeah. Here you go. New York Times, Federal Reserve left rates unchanged, but said it would increase. An increase would soon be warranted, citing high inflation and strong labor markets. They're a bunch of bitch is market goes down a tiny bit. Oh, but yeah, I mean, like, hey, we said transitory, bitches. You know what I'm saying? When untransitory, that's back to transitory. Yeah, you can't buy miners. It's illegal. You got to do it with an E and not an O. That's accurate. I mean, you got strong support here now. You know, anything above that $13 looking good. You want to be really safe, flip $20. But like, if you think Bitcoin's going up, you get into Riot. If not, look for a lower entry. Rose. Drew's funny, man. Drew, you're funny, dude. You're too old to be shilling shitcoins. I don't even know what the fuck a shilling is. Is that some kind of old money from ye old England?
Oh, please, sir, give me a shilling. I need a shilling, sir, for please. I'm so poor. My name is JRGB. Can you please give me a shilling of your shitcoins, sir? Please, sir, alms for the poor. I need a shilling.
Bro, you're never too old to trade shitcoins. Oh my God, you're such a God. In bed, like, if you're gonna troll, you have to spell. I've never understood people who like can't spell when they troll. Like, bro, get your grammar shit together if you're gonna troll. I would like to invite you now that I've mocked you, sure. Now that I've mocked you, JRGB, you have a chance to come back with a grammatically correct response. I'm not going to be reading it or looking for it, but I know that now you're stewing in your tiny whities, thinking of a great response, and now's your big moment, buddy. Rose, remember jock straps? Like, dudes just like wear those daily, like all the time. You can't suck. Yeah, I mean, you can't suck at trolling. It's embarrassing. It's embarrassing. You're too old for making money. Rose, this is it, right? 1, 2, 3. Not even shilling anything. I'm literally just looking at all the shit that you guys want me to look at. I don't know. Do you remember jockstraps? Like, I said something about that dude's tidy whities, and I remember it made me think of like how we had to always, like, in gym class to be like, wear jockstrap. I remember jock straps every time I get trolled and I need to bring out the huge balls, dunk on somebody. Drop the balls. Yeah, Rose, you don't fuck with me on my own live stream. I mean, if it ain't gonna be, if I'm not gonna mock you, I'm definitely gonna breakdance battle you, and you're gonna lose that too. You're gonna lose that. Look, guys, we're dumping. Bull trap. It's over. Everybody's dead. Dumping. It's $38,000. Oh my God, stonks are dead. Look at it. See, it's over. It's over. We're dead. We're not dead. Volatility, man. Volatility. It's a thing. Look it up. It's fine. Fine. This does seem right. Jock straps are just a genius ploy by perverted gym teachers. Sounds right. Bitcoin just died. It's $38,000. Seems fine. Died. It's dead. You guys, like, if that's really how you think, you got problems. Yeah. Bull trap. It's over. It's fine. Anyway, yeah, that's my view on Rose right here. Yeah, and you got this kind of area right here. Okay. So 36 cents, got to get above that. And I would say above this blue descending line. Sand in the box. There's a sandbox. It's a box. Sandbox. Let me see if this makes sense. Doubt it. Probably broken. Not the worst thing I've ever drawn. The idea is kind of there. Not bad. Not bad. Definitely same kind of thing, right? Wicking down at support. Kind of, oh, this looks pretty good. What's Bitcoin doing? Oh my God, it's dead. 37,900. It's, guys, it's back to the price it was an hour ago. We're dead. We're dead. I will try to stream the Fed speech at 2:30 if I can figure it out. I got to get through these charts. Then you guys are going to have to let me pee. And then I'll come back. Did the no spelling guy ever comment? Shilling?
Shilling for the Porsche, please.
Sand looks pretty good here. Sand looks pretty good here. Again, if you lose that, fine. You have you can go skydiving. Otherwise, risk reward's very good. Solana, yeah, guys, hanging out between had that bullish divergence. That's pretty sweet, but now it has hidden bearish divergence. No, it doesn't. Not yet, but it could. Slight higher high. But you have this bullish divergence, massively oversold, bouncing off $82 support. I bought it. That's all I can tell you. I bought it. I bought it. Sushi, same setup, guys. 1, 2, 3, 4, 5 candles in a row have wicked before 433. We have strong support on literally like every single thing. Everything. Yeah, it looks like we might have got bull trapped. That's cute. That's cute. Look at that. Stonks. You said inflation's bad, inflation's good. I don't know what to do. Sell it all. Sushi, right there. Sushi. Sushi. I'm gonna have to figure out how to stream that. You guys are gonna have to give me a minute. There you go. Sushi, same thing, right? Same setup. Here's another. We can add another line here. All of them. Strong support, or is it? We'll find out. Vet, however, broke support. Let's do this. Oh, Vet looks great. I would make this the line because that's the top of all of this. Vet needs to get back above this line. Kind of broke support and is wicking down. All right. V chain. Volatility. We're not dumping, we're volatile, guys. That's what happens here. This chat's super weird. Super weird. You missed some fun though. You missed some fun ones. Emmy, you think you could come in here and live stream while I like go to the bathroom and try to figure out how to like do a chat thing? I like to run the Fed meeting. You're not going to do that. Vet. Yeah, I would say Vet above there is good. The next major laser support is this area. That's not it. Here. 3 cents. You do have support here, though. I'll give you a support right here because you guys are going to freak out if you think it's going to 3 cents. We'll call this area support too. That's your V chart. V chain V chart. 37.7, it's over. It's dead. It's like back to prices not seen since, I don't know, we're actually massively up on the day. VGX rejected. But that's like, I don't know, actually, let's call it that. VGX, they all look the same. This one did break support a little bit. All still trying to hold support. VGX looks fine. They all look fine. But they could, like, if these all lose support, look out below. Sorry, looking in the chat. I love VGX too, if I ever said that. Like Voyager is a platform that I really use a lot. Like a lot. So that's the view of VGX. I'm going to get through these last ones. Then I'm going to like, you guys are just going to have to like listen to music or something. I'm going to have to try to figure out what to do. Walk away for a second and then see if we can figure out how to stream the meeting. XRP, I showed you guys yesterday. This has nice tweezer bottoms potentially on the weekly. Holding this support, even though it wicked through. XRP looks kind of good here. I'm going to be honest. I'm just being honest. Like Future, I'm just being honest. It's a rap song for those of you who don't know. There's another support right there. XRP looks kind of good, man. XRP looks kind of good. Got this. I can hear my voice in the other room, which means that I can hear my voice. XRP looks fine if it holds these supports. Cool. XYO, I don't know what you are, but it's on Coinbase. That's kind of tight. I don't know. Let's draw a thing. Something like that, even though you'd want to come off the highs, really, which would give you a more pitched line. There. Can't trade this below 2256000000. That black line. right? Like 2 cents. Right now it's making an all-time low, but it's only been trading since September. So you want to do one of these, right? Get rid of this line. I think you got a line here. Let's just draw some lines for you guys. Let's do some lines live. I like that line better than this line. Something through here. I'm just being honest. There's your general look. 8 cents, 4.5 cents, 3 cents, to 22 cents. Yeah, something like that. All right, guys, look. I'm going to let you stare at this Bitcoin chart. Okay? I'm going to mute this. I'm going to step away for 2 or 3 minutes. I'm going to try to figure out how to stream this thing if I can find it, and I'll be back. Y'all can leave. You can leave. Don't care. Don't care. But I'm going to be back in a minute. Okay? Got it? Yes, I'm muted. Emmy came in and said he's muted. Shut up, guys. You're such assholes. Stop sharing that. Okay, I'm going to find the link. Hold up 1 second. Jerome dropping his mixtape, and I'm going to miss it. Hold up. Okay, here it is. Here's the thing. Here's the stuff with the place and the things. Okay, we're gonna share screen, Chrome tab, watch FOMC, share tab audio. So look, we should theoretically, when this comes on, 2:30, should be able to watch this. I think. I lost 200 people when I peed. Whatever, man. Emmy, you'll be happy to know that I also, in the face of your advice, I'm sorry. Everybody wanted me to play that Pump It Up song, and I did it. I was like, I don't know how many hundreds of dollars this might cost me, but I'm going to play that shit. I'm going to play it. Oh, guys, look. The market's going up again. You panicky little children. Everything is popping again. And it'll go down, and it'll go up, and it'll go down. 38,300. Y'all are freaking out. Of course I washed my hands. What kind of place do you think this is? Yeah, I figured I'd gain people while I was peeing, but I should have. Oh, I pissed off my fans. That's funny. Drew, you're funny, man. You ever want to just come on and just like make jokes? Do jokes? Guys, my golf handicap, I'm not good. It's fine. Going all Charlie Brown's teacher. Yeah. I was not even like attempting to do this, by the way. So I don't know if this is going to work. Don't know what's going to happen. What is it? We have 4 more minutes. God damn it! To entertain you guys for 4 minutes. Check the Kava USD chart while we wait. No, now I got the thing pulled up. I can't mess with it. I can't mess with it. We use cookies on our website. Oh, shut it. I hate you. Video is private. We can see Yahoo FOMC live. Let's see if that one gets it. Live stream. Is this it? Hold up. No, there's going to be like some scammy shit that tells me. Maybe this is it. Inspirato, luxury vacations. Video will play after ad. Let's see what they got going on here. Yeah, this looks even better, to be honest. Well, hold up. Do this. 1 second. They've got music on this one, too. Is this like some weird meta shit where I'm like on YouTube streaming somebody else's YouTube? Did you guys hear that music? Did you hear that? Because then we'll know if we have sound. Did you guys hear that music? Okay. You're at my door. Just come on. Put on my watch. Missing all this. You guys hear these jams? Can you hear me talking over these jams? That's the question. Can you hear me talking over this music? This song's kind of depressing. We can make out some jams. I muted it for a second, yes, because whatever. Like, I'm gonna creep it. I'm just sharing this video. Okay, guys, we got like 1 more minute. Audio's loud. Let me see. If I do that, can you hear it? I have no idea what's happening. Yeah, this jam is kind of dope. This jam is kind of dope. Got that beat on that shit. Yes, welcome Benji. Benj. 9 trillion on the balance sheet. Ode to the losers. This is not Hans Zimmer. This is Hans Glimmer.
A shilling for the poor, sir.
Come on, man. Well, I can stop the music for now. You guys don't like that. We'll see if this comes on. Should come on right now. Yeah, I mean, this literally, like, I've been on hold music more pleasant than that shit. Come on. We're going to try to get it, though. Try to get it. I did put a peep behind it, but I had to do it with my mouth. Oh, wait. I think the music stopped. I think they stopped the music. Let's see. Oh, here he is.
Good afternoon. At the Federal Reserve, we are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. Today, in support of these goals, the Federal Open Market Committee kept its policy interest rate near zero and stated its expectation that the committee also agreed to continue reducing its net asset purchases on the schedule we announced in December, bringing them to an end in early March. As I will explain, against a backdrop of elevated inflation and a strong labor market, our policy has been adapting to the evolving economic environment, and it will continue to do so.
He swallowed, it's over.
Expanded at a robust pace last year, reflecting progress on vaccinations, and the reopening of the economy. Fiscal and monetary policy support, and the healthy financial positions of households and businesses. Indeed, the economy has shown great strength and resilience in the face of the ongoing pandemic. The recent sharp rise in COVID cases associated with the Omicron variant will surely weigh on economic growth this quarter. High-frequency indicators point to reduced spending in COVID-sensitive sectors, such as travel and restaurants. And activity more broadly may also be affected as many workers are unable to report for work because of illness, quarantines, or caregiving needs. Fortunately, health experts are finding that the Omicron variant has not been as virulent as previous strains of the virus, and they expect that cases will drop off rapidly. Again. If the wave passes quickly, the economic effects should as well, and we would see a return to strong growth. That said, the implications for the economy remain uncertain, and we have not lost sight of the fact that for many afflicted individuals and families, and for the healthcare workers on the front lines,
is that a better volume?
The virus continues to cause great hardship.
I'm just hitting your comments.
The labor market has made remarkable progress, and by many measures is very strong. Job gains have been solid in recent months, averaging 365,000 per month over the past 3 months. Over the past year, payroll employment has risen by 6.4 million jobs.
A lot of jobs.
The unemployment rate has declined sharply, falling 2 percentage points over the past 6 months to reach 3.9% in December. The improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand remains historically strong. With constraints on labor supply, employers are having difficulties filling job openings, and wages are rising at their fastest pace in many years. While labor force participation has edged up, it remains subdued, in part reflecting the aging of the population and retirements. In addition, some who otherwise would be seeking work report that they are out of the labor force because of factors related to the pandemic, including caregiving needs and ongoing concerns about the virus. The current wave of the virus may well prolong these effects. Over time, there are good reasons to expect some further improvements in participation and employment. Inflation remains well above our longer run goal of 2%. Supply and demand imbalances related to the pandemic and the reopening of the economy have continued to contribute to elevated levels of inflation.
Oh, he didn't say that good.
In particular, bottlenecks and supply constraints are limiting how quickly production can respond to higher demand in the near term. These problems have been larger and longer lasting than anticipated, exacerbated by waves of the virus. While the drivers of higher inflation have been predominantly connected to the dislocations caused by the pandemic, price increases have now spread to a broader range of goods and services. Wages have also risen briskly, and we are attentive to the risks that persistent real wage growth in excess of productivity could put upward pressure on inflation. Like most forecasters, we continue to expect inflation to decline over the course of the year. We understand that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. In addition, we believe that the best thing we can do to support continued labor market gains is to promote a long expansion, and that will require price stability. We're committed to our price stability goal. We will use our tools both to support the economy and a strong labor market, and to prevent higher inflation from becoming entrenched. And we'll be watching carefully to see whether the economy is evolving in line with expectations. Yes. The Fed's monetary policy actions have been guided by our mandate to promote maximum employment and stable prices for the American people. As I noted, the committee left the target range for the federal funds rate unchanged and reaffirmed our plan announced in December to end asset purchases in early March.
That's what I said would happen.
In light of the remarkable progress we've seen in the labor market and inflation that is well above our 2% longer run goal, the economy no longer needs sustained high levels of monetary policy support. That is why we are phasing out our asset purchases and why we expect it will soon be appropriate to raise the target range for the federal funds rate. Of course, the economic outlook remains highly uncertain. Making appropriate monetary policy in this environment requires humility, recognizing that the economy evolves in unexpected ways. We'll need to be nimble so that we can respond to the full range of plausible outcomes. With this in mind, we will remain attentive to risks, including the risk that high inflation is more persistent than expected, and are prepared to respond as appropriate to achieve our goals. To provide greater clarity about our approach for reducing the size of the Federal Reserve's balance sheet, today the committee issued a set of principles that will provide a foundation for our future decisions. These high-level principles clarify that the federal funds rate is our primary means of adjusting monetary policy.
You guys are hilarious.
And that reducing our balance sheet will occur after the process of raising interest rates has begun. Reductions will occur over time in a predictable manner, primarily through adjustments to reinvestments so that securities roll off our balance sheet. Over time, we intend to hold securities in the amounts needed for our ample reserves operating framework. And in the longer run, we envision holding primarily Treasury securities. Our decisions to reduce our balance sheet will be guided by our maximum employment and price stability goals. In that regard, we will be prepared to adjust any of the details of our approach to balance sheet management in light of economic and financial developments. The committee has not made decisions regarding the specific timing, pace, or other details of shrinking the balance sheet. And we will discuss these matters in upcoming meetings and provide additional information at the appropriate time. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. For the first question, we'll go to Chris Rugaber at the Associated Press.
Thanks, Michelle, and thank you, Chair Powell. So it's expected that the Fed will hike rates perhaps every other meeting, but certainly in the past, the Fed has hiked at every meeting. So I just wanted to ask, are rate hikes at consecutive meetings on the table? This year, is every meeting a live meeting? And on that note, would the Fed consider front-loading some of its rate hikes, even if it doesn't raise every meeting? Thank you.
Thanks. So as I referred to in my opening statement, it is not possible to predict with much confidence exactly what path for our policy rate is going to prove appropriate. And so at this time, we haven't made any decisions about the path of policy. And I stress again that we'll be humble and nimble. We're going to have to navigate cross currents and actually two-sided risks now. And I'll say also that we're going to be guided by the data. In fact, what I'll say is that we're going to be led by the incoming data and the evolving outlook. We'll try to communicate as clearly as possible, moving steadily and transparently. So, more to your question.
He said
we know that the
transparently,
economy is
transparently.
in a very different place than it was when we began raising rates in 2015. Specifically, the economy is now much stronger. The labor market is far stronger. Inflation is running well above our 2% target, much higher than it was at that time. And these differences are likely to have important implications for the appropriate pace of policy adjustments. Beyond that, we haven't made any decisions.
You guys are so funny.
Thank you. Let's go to Victoria Guida at Politico.
Bro, this is lame.
Hi, Chair Powell. I wanted to ask, you were talking about the health of the labor market, and I'm curious whether you would characterize where we're at right now as maximum employment, and also along those same lines, obviously rate hikes on the table this year. Do you think that the Fed can raise rates, bring inflation under control without hurting jobs and wages?
Sorry, just getting both parts of your question written down. So I would say, and this view is widely held on the committee, that both sides of the mandate are calling for us to move steadily away from the very highly accommodative policies we put in place during the challenging economic conditions that the economy faced earlier in the pandemic. And I would say that most FOMC participants agree that labor market conditions are consistent with maximum employment in the sense of the highest level of employment that is consistent with price stability. And that is my personal view. And again, very broad support on the committee for the judgment that it will soon be appropriate to raise the target range for the federal funds rate. The other thing is maximum employment will evolve over time and through the course of the business cycle. In the particular situation we're in now, it may well increase. The level of maximum of employment that's consistent with stable prices may increase, and we hope that it will as more people come back into the labor market, as participation gradually rises. And the policy path that we're broadly contemplating would be supportive of that outcome as well. So the thing about the labor market right now is that there are many millions of more job openings than there are unemployed people. So you ask whether we can raise rates and move to less accommodative and even tight financial conditions without hurting the labor market. I think there's quite a bit of room to raise interest rates without threatening the labor market. This is, by so many measures, a historically tight labor market. Record levels of job openings, of quits. Wages are moving up at the highest pace they have in decades. If you look at surveys of workers, they find jobs plentiful. Look at surveys of companies, they find workers scarce. And all of those readings are at levels really that we haven't seen in a long time, and in some cases ever. So this is a very, very strong labor market. And my strong sense is that we can move rates up without having to severely undermine it. I also would point out that there are other forces at work this year which should also help bring down inflation. We hope, including improvement on the supply side, which will ultimately come. The timing and pace of that are uncertain, and also fiscal policy is going to be less supportive of growth this year, not of the level of economic activity, but the fiscal impulse to growth will be significantly lower. So there are multiple forces which should be working over the course of the year for inflation to come down. We do realize that the timing and pace of that are highly uncertain, and that inflation has persisted longer than we thought. And of course, we're prepared to use our tools to assure that higher inflation does not become entrenched.
Oh my God. I don't have to say
Let's go to
anything.
Nick Timrose at the Wall Street Journal.
Good afternoon, Chair Powell. Nick Timmerhouse of the Wall Street Journal. I have a couple of questions on the balance sheet. The statement on the balance sheet today calls for significantly reducing your holdings. What does that mean? And then apart from moving sooner and faster to shrink the holdings, are there any other ways in which you and your colleagues are seriously thinking about recalibrating this process? And finally, how much disagreement is there around how you should use this tool, including active sales rather than passive sales, or changes in the composition of reinvestments? Thank you. So
I'm afraid to tell you that those are all great questions, and they're questions that the committee is just turning to now. So we had a discussion, as you know, at the last meeting, an introductory discussion of the balance sheet and a teeing up of the issues. At this meeting, we've gone through and carefully put together a set of principles at a high level, and those are meant to guide the actual decisions we'll make about the pace and about all of the questions that you're asking. And I expect that this process will be something that we spend time on in coming meetings. I can't tell you how many, I can't tell you how long it will take, and then, at the appropriate time, we'll provide additional information. So the last cycle when we went through balance sheet issues, we did find that over the course of 2 or 3 meetings, for example, we did come to interesting and better answers, we thought. So we're just in that process now, and at the next meeting, we'll be turning to more of the details that you're asking about. I would say this: the balance sheet is much bigger. It has a shorter duration than the last time, and the economy is much stronger, and inflation is much higher. So, and I think that leads you to, and I've said this, being willing to move sooner than we did in the last time, and also perhaps faster. But beyond that, it's really not appropriate for me to speculate exactly what that would be. But I would point you to principle number 1, which is the committee views changes in the target rate for the federal funds rate as its primary means of adjusting the stance of monetary policy. So we do want the federal funds rate. We want to operationalize that, and we want the balance sheet to be declining in a predictable manner, and we want it to be declining primarily by adjusting reinvestments.
So if I could follow on that, raising rates and reducing the balance sheet both restrain the economy, both tighten monetary policy. How should we think about the relationship between the two? For example, how much passive runoff is equal to every quarter percentage point increase in your benchmark rate?
So again, we think of the balance sheet as moving in a predictable manner, sort of in the background, and that the active tool meeting to meeting is not both of them, it's the federal funds rate. There are rules of thumbs. I'm reluctant to land on one of them that equate this, but there's also an element of uncertainty around the balance sheet. I think we have a much better sense, frankly, of how rate increases affect financial conditions and hence economic conditions. Balance sheet is still a relatively new thing for the markets and for us, so we're less certain about that. So again, I think the pattern we'll follow is to arrive at a timing and a pace and composition and all those things, and then announce that with advance notice, and it will start in the background, and then we'll look to have that just running in the background and have the interest rates again be the active tool of monetary policy. That's at least the plan. I can't tell you much more about any of the very good issues about size, pace, composition, those sorts of things. We'll be turning to all of those at coming meetings.
Thank you.
Zoom.
Thanks. Now we'll go to Neil Irwin.
So many comments.
Thank you, Chair Powell. It's Neil Irwin from Axios. Glad to be back. Sir, I was wondering if the volatility we've seen in financial markets in the last few weeks strikes you as anything alarming or that might affect the trajectory of policy. Conversely, to the degree that financial conditions have tightened some, might that be desirable in some ways in achieving your tightening goals?
Come on, suitcase.
So, as you know, the ultimate focus that we have is on the real economy, maximum employment and price stability. And financial conditions matter to the extent that they have implications for achieving the dual mandate. And you also know that we look at broader financial conditions, not one or two things, one or two markets. And what we're always asking ourselves is, are we seeing changes that are both persistent and material enough that of a change in financial conditions that they are inconsistent with the achievement of our goals? So that's how we're looking at that. And I don't want to comment on today's financial conditions broadly, but we're not looking at any one market or so. So that's how we're thinking. In terms of what we've seen, I would say this. We said at our last meeting, we published a summary of economic projections, the median participant expected 3 rate increases this year. And, it's 6 weeks, 7 weeks later now. And you have seen that our communication channel with the markets is working. Markets are now pricing in a number of rate increases. Surveys show that market participants are expecting the balance sheet runoff to begin, at the appropriate time, sometime later this year, perhaps. We haven't made that decision yet. So we feel like the communications we have with market participants and with the general public are working, and that financial conditions are reflecting in advance the decisions that we make. And monetary policy works significantly through expectations. So that in and of itself is appropriate.
Thank you. Let's go to Howard Schneider.
For a year or hi, thanks, Chair Powell. Howard Schneider with Reuters. So for a year now, the statements reference the benchmarks for this initial interest rate increase. Now that we're approaching that moment, what are the benchmarks going to be for subsequent rate increases? I know you can't stipulate the path, but how should we think about the criteria for the next step and the next step?
Well, you're right. We haven't gotten to that point yet. We haven't made a decision yet, and we'll make that decision at the March meeting. We'll make a decision whether to raise the federal funds rate. I would say that the committee is of a mind to raise the federal funds rate at the March meeting, assuming that conditions are appropriate for doing so. We have our eyes on the risks, particularly around the world, but we do expect some softening in the economy from Omicron, but we think that should be temporary, and we think that the underlying strength of the economy should should show through fairly quickly after that.
If I could follow, just on a related question, the December SEPs had this copacetic sort of set of circumstances where inflation comes down without the federal funds rate ever getting over the estimate of neutral. Given developments since then, do you still think that's a credible narrative for the ultimate path of policy?
My path is highly uncertain, and that we're committed to using our tools to make sure that inflation, high inflation that we're seeing, does not become entrenched. So a number of factors would be, it's not just monetary policy. A number of factors are supporting a decline in inflation. As I mentioned, fiscal policy will providing significantly less of an impulse to growth. We do expect this year, although we do expect now that it will come slower than we had expected and hoped, that there will be relief on the supply side. So that too should lower these supply side barriers, which are a big part of the story why inflation is high. In addition, monetary policy will be becoming significantly less accommodative. So the question is, we'll be asking this question all year long, and that will be, are things turning out as we expect? There's a case that for whatever reason, the economy slows more and inflation slows more than expected. We'll react to that. If instead we see inflation at a higher level or a more persistent level, then we'll react to that. And again, we're well aware that this is a different economy than existed during the last tightening cycle, and our policy is going to reflect those differences.
Oh, God. That's so good. Yeah, so good.
Thank you. Let's go to Gina Smialik.
Bueller.
Let's go to Gina.
Bueller. Gina. Bueller.
Okay, let's go to Steve Leisman.
Okay, Steve. Scuba Steve. Let's go, Scuba Steve. Come on,
Thank
Scuba
you,
Steve.
Thank you, Mr. Chairman. Mr. Chairman, I have one sort of
Gina.
technical question and one
Gina.
question on
Gina.
principle. The technical question is, if you're going to discuss balance sheet at next upcoming meetings and you won't begin balance sheet reduction until after you begin rate hikes, it seems to technically mean that you won't or can't begin balance sheet reduction until the summer. Is that correct? That's the first thing. Second of all, you suggested that the with balance sheet running in the background, that you would possibly be raising rates and running off the balance sheet at the same time. That's sort of the technical question part of it. The principal question I have is, you said it's going to be running in the background, but the statement on balance sheet principle says the committee is prepared to adjust any of the details of its approach based on economic and financial developments, which suggests there's something of a reaction function associated to the balance sheet, and it won't be running in the background. So could you give us any sense of the discussion or staff presentation on what is the reaction function surrounding the balance sheet? Thanks.
So let me start by talking about that last paragraph. So you'll remember during the last cycle that this process of building up and then shrinking the balance sheet is a complicated one, and it involves inevitably surprises. And so during the years, during the prior cycle, we amended our balance sheet principles a number of times. Now, we didn't intend to do that. Events required us to do so. So we got a pretty robust paragraph there that says we're free to do this at any time. And it doesn't mean we're going to, but if the situation turns out to be different than we had thought, we're not going to stick with something that isn't working. That's all that's saying. It's meant to be quite a general statement rather than a hint. So, I mean, I like to think that our philosophy of the balance sheet is embodied in these principles. So, the idea that, for example, the federal funds rate is the primary means of adjusting the stance of policy, that will determine the timing and pace of reducing the size of the balance sheet to foster the dual mandate, that will begin to reduce the size after we begin the process of raising rates, and on like that. I mean, those are all the things that try to describe how we will proceed. But it may be at a higher level.
Sorry, Sean, you can't
try to
hear me.
Get at your question. Asset purchases were enormously important at the beginning of the recovery in terms of restoring market function, as they were right after in the critical phase of the global financial crisis. And then after, they were a macroeconomic tool to support demand. And now the economy no longer needs this highly accommodative policy that we put in place. So it's time to stop asset purchases first, and then at the appropriate time, start to shrink the balance sheet. Now, the balance sheet is substantially larger than it needs to be. We've identified the end state as in amounts needed to implement monetary policy efficiently, effectively in the ample reserves regime. So there's a substantial amount of shrinkage in the balance sheet to be done. That's going to take some time. We want that process to be orderly and predictable. And so those are some of the ways I would think this lays out our the way we're thinking about this.
Tissue.
In terms of the timing, I can't really help you. It just says after we get underway. So I would say we're going to have another discussion at the next meeting. And my guess is we'll have at least one other discussion at the meeting after that. And, we'll tell you as we make progress, and we'll start the process of allowing runoff and shrinking the balance sheet at what we find to be the appropriate time. I wish I could say more, but honestly, we haven't made those decisions, and we actually haven't even really had the important discussions on a lot of the details that we will have at coming meetings.
Thank you. Let's go to Craig Torres.
Chair Powell. Good afternoon, Michelle and Chair Powell. Craig Torres from Bloomberg. Chair Powell, at the beginning.
I did it again. Unfortunately, I got to run because I have literally a call in 2 minutes. You guys can find that on Yahoo. The gist is they're not changing anything at this exact moment. Going ahead as scheduled from December, it would seem next meeting, they'll probably start to raise rates, and they'll do it in an orderly manner. Basically, much ado about nothing. Guys, I got to go. I'm sorry. It's so funny. I didn't expect to do this. Of course, there's people in the comments bitching like, bro, I want to see your commentary on the thing. Bro, I just pulled this shit up. I wasn't planning to do this. Your comments were the best thing. No wonder I don't usually watch this channel. Shania, you're welcome to leave anytime. Don't let the door hit your ass on the way out. Gotta go, people. I'm going to leave that comment up there while we do this. Bye.
Let's go.
Bye, Felicia.
Bye, Felicia.